I believe it makes sense to give restrictive monetary policy more time to work. In my view, it is less certain that we need to keep hiking the policy interest rate in the immediate term, lest we risk tightening too much and draining too much momentum from the economy. When will restrictive monetary policy start restraining inflation more powerfully? Well, put simply, not as soon as I'd like, but I do believe that underlying inflation is declining gradually and in a way that may well be sustainable. My staff and I find glimmers of hope in recent inflation reports. Notably, the distribution of price increases has narrowed considerably, which is a strong indicator that underlying inflation is in fact abating. Now, last month marked the first month since August of 2021 when less than 40% of the expenditure-weighted share of prices in the consumer price index basket rose by 5% or more. For perspective, the share of prices jumping 5% or more peaked at 80% in early 2022. So we've come a long way off of these extreme price dispersions. And this narrowing of severe price increases deepens my conviction that we are on a path to reducing inflation. Now, alongside the narrowing of price increases, I'll sound a hopeful note on service prices too. Even though it's been widely noted that core non-housing services prices have not pulled back substantially, my staff and I see nascent signs that this could be changing. The rate of price increases in this category has edged successively lower in each of the past 3 monthly inflation readings. Now, I recognize this does not necessarily herald definitive long-term disinflation in services. Still, I see an emergent and promising trend, a green shoot of hope, if you will, in a category that accounts for more than half of the consumer market basket.